When the stock market crashes, will crypto go down with it? Important to know. Is the recent drop that occurred in the value of cryptocurrencies likely to have a domino effect on the stock market and vice versa? In light of the stock market's decline, how does the crypto market perform? Welcome to Crypto Live. In this video, know if the stock market crashes, will crypto go down with it? Please like the video and subscribe to our channel to stay updated on our upcoming videos about cryptocurrencies. Cryptocurrency markets are wrecked by a soured mood and a brutal institutional sell-off that has left retail investors forking over huge losses. And this can be called nothing but a crash. The reality is, it is difficult when the stock market or cryptocurrency market is on the downturn to determine what is happening until well into or even after a decline, because at first, the experienced investors jump ship and leave those who are still exploring what is happening in trouble. As Bitcoin and many altcoins have dropped 20 to 30% from recent highs, you may wonder if this is a tantrum, crash, or simply a sell-off. No matter what you call it, not only the sharp decline over the past 24 hours, but also overall market performance that we have witnessed so far until around May 21st have been a cause for concern for all types of market participants, whether investor, trader, or speculator, or a random guy who hopped to the high seas. Is this why the recent huge volume of sales occurs? It is very frightening to think that everything is going to spiral out of control and wipe out all your savings. The effect is even stronger if you're managing money for others and you face the potential loss of your career. An investor may easily and understandably become panicked during this time. Sure, there's always a possibility that prices could level off and gain at least some ground in the future, and many reference the past to say how it recovered last time. Is this reasonable? Not really. Historical data or pictures cannot predict when the stock or crypto market will recover. In today's market, it is possible to say that due to the reason that is below the current lows, the bottom won't be reached for most cryptos, and the worst is likely to come as the sell-off runs its course in the coming days. As long as the current market downturn continues, Bitcoin may drop further towards $20,000, causing a significant drop in the entire market. Do you think crypto will crash when the stock market collapses? Especially for stock and crypto investors, this video is very important to watch, so stay tuned. Also, please let us know your thoughts by leaving some comments below. The stock market stumbled and crypto markets slumped following a $400 billion correction. Analysts at JP Morgan warned in a May 17th morning note that other risky pockets might exist in the broader market. These include buzzy special-purpose acquisition companies and clean energy stocks, which are now approaching bear market territory. Investors worry about inflation ahead, unraveling the massive gains of the longest bull market in history. What are the key things investors should remember? Although global stock prices only dropped 2.5% from their peaks in April and May, some indexes, including the Nasdaq, are down about twice as much. That suggests markets are expensive and inflation is running hot, JP Morgan analysts noted in a note last May 17th. After roughly tripling this year, cryptocurrency prices have plummeted nearly 18% from a Wednesday high last May 12th. This is due in large part to a series of negative tweets from billionaire Elon Musk, who has recently soured on Bitcoin. As the broader tech sector slips and inflation raises the price of commodities necessary to manufacture products in the field, clean energy stocks, which tripled last year in anticipation of progressive climate legislation, have plummeted by more than 35% since January. New market debuts from Airbnb, Coinbase, DoorDash, and others have dominated the last year, but after rising by more than 100% in a year, to a peak in February, newly listed U.S. stocks are down 26%, according to Renaissance IPO ETF. A frothy market indicator like SPACs and their public companies are faring even worse, down an average of nearly 38% from a February high, according to the first ever SPAC ETF. A 34% plunge since February in ARK Innovation ETF which invests in disruptive technology and whose top holding, Tesla, is in line with that drop. Crucially, all of these moves are consistent with a chain reaction that occurs when markets are expensive, but the ecosystem connecting the economy, markets, and the Federal Reserve isn't a nuclear power plant destined for meltdown. JP Morgan analysts led by John Normand wrote Monday, pointing out that the past market cycles have shown about 80% of seemingly expensive asset classes that crash in one business cycle that end up returning to previous highs in the next cycle. Stocks and other assets have reached meteoric new price highs as a result of the Federal Reserve's unprecedented pandemic stimulus efforts. However, looming concerns that pent-up demand, the liquidity of the economy, and soaring inflation could prompt the Federal Reserve to change its policy are now starting to rock the market. Stocks had their worst week in 3 months already, until last May 22nd, and other assets have become increasingly sensitive to unpredictable shocks. Most notably, the volatile reaction of the cryptocurrency market to Musk's hot and cold tweets. And what should stock and crypto investors watch out for? An inflation-induced stock market correction is possible, but an inflation-fueled shift in market leadership is more likely. Analysts at wealth advisory Glenmead wrote in a Monday note to clients, echoing commentary from other experts predicting that value stocks in recently hard-hit sectors like energy and financials will lead the market this year, as opposed to longtime market leaders in technology. But why is the market crashing now? A number of factors have contributed to the current crisis, some of which are fundamental to the future of the market. Generally, an unexpected and rapid decline in prices is the hallmark of a market crash. Although it generally has underlying causes, public panic usually amplifies it, fueling panic selling that depresses prices further. Although it is impossible to pinpoint a single factor, it appears as though investors and traders are increasingly cautious about prospects of the cryptocurrency market for a number of reasons. Meanwhile, the declines in major stock market indexes weren't all that large, but they did extend a recent downtrend. Last May 22nd at 6:40 UTC, the Dow Jones Industrial Average dropped 146 points to 34,207. There had been gains of 27 points for the S&P 500 and 167 points for the Nasdaq Composite. In fact, some crypto-based stocks took big hits as a result of the cryptocurrency crash last May 22nd. But the broader market is dealing with other issues that will continue to affect its performance for the foreseeable future. Let's take a look at both aspects of the market's movements last May 22nd. As would be expected on a day when cryptocurrencies struggled, crypto-related stocks declined sharply. Some of those hardest hit included a drop of 3% was recorded by crypto exchange Coinbase Global, NASDAQ COIN, Marathon Digital Holdings, NASDAQ MARA, and Riot Blockchain, NASDAQ RIOT, dropped 4% and 5% respectively. Silvergate Capital, New York Stock Exchange SI, managed to narrow its losses to 4% after having lost as much as 10% previously. MicroStrategy, NASDAQ MSTR, whose leveraged bets on cryptocurrencies have been well documented, saw its stock fall 4%. In contrast, the declines over the last year weren't as dramatic as some of the crypto tokens themselves, which fell 15% to 25%. That suggests that investors understand the steep decline in cryptocurrency as part and parcel of the market's natural weeding out. Thus, if you've been involved with cryptocurrencies for more than a few months, you've certainly witnessed the massive drops that have occurred historically in the crypto market. So why is the stock market falling? There is a broader and more concerning trend across the investing universe than just the rise in cryptocurrencies, as many see it as one facet of a larger one. And as we have mentioned earlier, that in conjunction with the Federal Reserve's monetary policy, which has resulted in low interest rates, leverage opportunities have increased significantly, and both individuals and institutions have taken full advantage. As a result of cheap financing, asset prices have risen sharply, not only in stocks but also in areas such as real estate, where home prices have risen sharply in the last year. With higher prices for necessities, inflationary pressure is now jeopardizing the Fed's monetary policy. This has investors concerned that interest rates will have to rise, exposing the amount of leverage in the financial system. Although the economy shows signs of strength, rates could bring any expansion to a screeching halt. Those ramifications would have an impact on the economy across all sectors, and that's why stocks have looked fragile. Indirectly, the cryptocurrency crash does not affect the stock market too much. However, the fact that cryptocurrency prices are falling so sharply is an indication of a larger problem, one that could affect even stocks without a direct correlation to cryptos. Thus, if you want to take a strike at growth, at the moment the market seems increasingly risk-averse. In most cases, that means focusing on core positions and not making aggressive bets. A tactical investor, however, might wish to save a little cash to take advantage of better prices if they occur in the near future. That's all for this video about crypto, and thank you for watching. If you would like to receive updates on the crypto market, make sure you click the subscribe and bell button.